Hey everybody, I want to thank you for your time. Welcome to our little webinar today. We're going to be discussing um, what the crystal ball that I got in the mail the other day is telling us about how things are progressing, what we're dealing with. We're going to discuss how COVID has impacted building materials, how we're dealing with shortages in our resources, and how that's affecting the real estate market in Idaho, as well as overall across the country. So I was able to get a good feel. We've got people from all over. If you haven't, throw your home state in the chat so I can kind of get a feel for where everybody's at. Um, Also, want to see who all is currently involved in real estate. Raise your hand, hit the hand raise button for those people that are involved in real estate currently or looking to get involved. Let's see. Okay, so we've got a majority of people are involved in real estate. That's great. All right. So we're going to be talking about it as it relates to real estate, but I want to give you guys a little bit of an introduction on who I am, just to make sure we all know why I'm having this conversation with you guys. My name is Shannon Robnett. Like I said earlier, I am a second generation builder developer, and I am a fourth generation realtor. We go back to the Great Depression as far as real estate sales, and my father was a general contractor out of Southern California. We moved to Idaho when I was about 8 years old. And so I've been building here in the Valley for 27 years in my own companies, but I grew up on the job sites and I saw, the recession that we had in the 90s. I saw 2008. I've seen many different market cycles, and that is really kind of no different than what we're seeing now, but it's different, right? Went through 9/11, went through the different things that we saw in the dot-com bubble burst and was it Black Friday? No, that's the one my wife likes. It was Black Monday when we had the stock market crash in the late 80s, and how that bubble burst. But it all affects us, and what we're trying to do is we're trying to build a better mousetrap here, right? We're trying to get to a place where we're not caught by these cycles, and we're trying to figure out how to get around that and make this an easier thing for all of us to know and understand, so that we can come out of it better. But I believe in using our circumstances to learn. Right. My father told me for a long time, you know, back in the 70s, we had the inflation with Jimmy Carter and the market slowed, and you need to know about this. I'm like, Dad, I don't need to know about this. Well, you don't understand. You haven't lived through it. Now I can say that I have, right? Because I went through most recently, the downturn, the global recession, global financial meltdown, whatever you want to call it, that happened in 2008, 9, and 10, right? That we really truly haven't recovered from. Those of us that are involved in real estate know that 14 was the best year as far as having comfort and knowing that you're buying right, and then also knowing that you're buying at a great price. 11, 10 was probably the best year to buy with blood in the streets, right? But a lot of us were frozen on the sidelines in 10. A lot of us weren't moving in 11, 12. It took 14 for a lot of us to get back into the saddle of, hey, this is what we're supposed to do in real estate. This is how we do it. And it was those circumstances that we all went through, where we went and we saw the bottom, we recovered from that, we saw what happened. And that, a lot of times, that negatively affects us, and we get panicky when we get into situations like we're currently facing, because we don't really know. And as humans, the unknown is terrifying, right? The unknown of what's going to happen next is what is fearful. I was having a conversation today with a really great friend of mine, and I mentioned to her that being an entrepreneur and being a developer and being out on the front edge of the economy really isn't as much about intelligence as it is about mindset, as it is about the intuitiveness of what is the market bringing. Because if we look back on it, we can see where the opportunities were in 14 and 13, right? We can even see the opportunities into 17 and 18. But now we're sitting here facing something different, but really isn't any different than some of the other cycles we had, right? We can all remember where we were at on 9/11, and all of a sudden the world stopped, or the US stopped for 5 days, right? I mean, at least we didn't worry about supply chains at that point. We didn't worry about what was going to happen next. And if we apply that, we did the same thing when COVID hit, right? We started hearing about it. We started seeing, hey, COVID this, COVID that. We started seeing, people shelter in place, and then cities and then states started to lock down, and then the government got involved, and everything started to change, but nothing really started to change, right? I remember asking people, what are we going to do next? What's going to happen? How are we going to deal with this? What's going to go on, right? Because we're all trying to gather information. We're all trying to get squared away on what we want to understand, because we as humans are driven by knowledge, and being driven by knowledge is what makes us feel like we have some sort of control, right? But the reality is none of us have any control over the world market. None of us are big enough players. We're not Elon Musk. We can't tweet out there about Dogecoin and tank a global financial economy, right? I mean, we just don't have that kind of power. But by a show of hands, who is involved in the crypto world at this point? How many of us are dabbling in the other side, the dark side, as they call it, in the crypto world? Okay, we got 4. Dean, I don't see your hand up, but I know you do it. Oh, there you go, Dean. All right. So, so we've got, none of us have that kind of global growth or global reach, right? But what we have seen that we can put our hands on that's tangible is the demand for lumber has exploded. But is it all about the demand for lumber? I mean, we've known for a couple of years that the Canadians are facing a pine beetle infestation like has never been seen in history, right? What that means is that the trees that are there are getting infected by the pine beetle, which eventually kills the tree. And if it's not harvested fast enough, it'll rot in place and become structurally unstable, and they can't use it. But the problem is you've got to cut it out and get it out of the forest so that you can make room to plant the new tree, right? But that's all been put on hold because trees aren't being harvested because of COVID. The border between the United States and Canada has been closed, so a lot of softwood's not moving back and forth across the border, right? We've had people close out on the lumber mills. I have a friend and a fellow investor who is involved in the lumber industry. They operate 14 mills across the nation, and they typically run 3 shifts, right? 3 8-hour shifts. They've been lucky to fill 1 shift. Why? Because daycare isn't available like it used to be. Let's just face it. There's government money on the table that make it profitable to sit at home. There's a lot of different reasons why, but the reality is sawmills are not producing what they used to, right? So prices have skyrocketed, right? 1,000 board feet used to trade at about $400. Now it's up over $1,700, right? The good news is we're starting to see the top of that. It's not accelerating at $100 a week anymore like it used to, right? But let's take a look at what that does. This one little thing that we use 16,000 board feet in the average home built in America, that cost went from about 10,000 to about 40 grand. Kind of small in the total overall cost of a house. I mean, we're going to assume that the average cost of a house in America is about 400 grand, and you've got, $30,000 you've added to it, but then everything else begins to move because of that, right? We thought that COVID was going to shut the world down, so a lot of manufacturers didn't place their orders like they normally do. They didn't take that into consideration. In fact, they liquidated what they had so they didn't get caught with inventory. So now we went from a market that is normally full of stoves and appliances and sliding glass doors and all those things, and we got rid of them. We dwindled down the inventory because we didn't want to get caught holding it, right? On top of that, what I would consider to be home improvement guys and hobby craft people, that lumber demand went through the roof. People that have always been wanting to build out the study and convert the kid's bedroom to their new home office now had all the reason in the world to do that because they were working from home, right? And I know a lot of this stuff, guys, you've heard about, you've thought through, but did you realize that the guy, your neighbor that built that deck in the backyard, that probably never would have built that deck unless he was working from home and his boss thought he was working, but he was out back building that deck? All of those things added and exacerbated the situation because we had a dwindled lumber supply and we had an increased lumber demand. People had time on their hands like no other because they weren't going to the movies, right? They weren't going downtown hanging out and listening to music. They were home and they realized they didn't like their home. You know, there's a lot of people that said that their motivation for selling their home during COVID was because they spent so much time in their home and they realized they didn't like it, right? So instead of slowing a lot of industries, COVID actually accelerated it, right? So now we have lower inventories, higher demand. That's basic economics, right? We know that that's going to cause a situation where supply and demand are going to far outweigh each other. And then we're going to have this situation. Now we're bored. Everybody got $2,800 sent to them, right? Well, I didn't, but most people got, in a two income home, you got $2,800 for you and $2,800 for your spouse. You put that together. That's enough to do on a home entertainment room. That's enough to do some of the cabinet remodel projects that you've been planning in a kitchen or to redo the deck or the yard. So a lot of that stuff started to happen, right? A lot of people looked at it and said, you know what? Now's a great time to sell. I'm going to go ahead and take my profits off the table. I'm going to sell and I'm going to know that I locked in and I'm going to move to another house. And if you looked at that, if you sold a house at $400,000 that you paid $275 for a year and a half ago, you've now put $125,000 in your pocket. You go buy the next house. What do they want down? 3%, right? So you're coming into that house with $15,000. You now have $130,000 in a bank account for the first time, maybe in your life. And what are you going to do with that? You're just going to sit on it? No, you're going to do what everybody said to do with it anyway. You're going to do what Dean said. You're going to buy Doge, right? Maybe not with all of it, but you're going to be able to buy some things that you didn't have the ability to before. So you're going to buy that, put that deck in and put that hot tub on it, right? You're going to finish the fence. You're going to redo the yard, those kinds of things. So we started to see a lot of that where we were seeing extraordinary demand while we saw extraordinary low inventories. And so that began to really kind of jostle things around and make things difficult to find. And then the panic came in, right? We saw what happened with toilet paper for crying out loud. I mean, everybody knew that we were headed into a crisis situation. Why not beans and rice? Why not sustainable products? Why do we have a shortage in that? Now we're going through a beef shortage, right? Because we didn't have, we're now sitting there thinking, well, we're not going to have enough meat, right? I remember hearing that they had wiped out entire crops of chickens, right? Because they didn't think that they were going to need them because they thought nobody was going to be buying it because everybody's on lockdown, right? The restaurant industry has pivoted. Record numbers of restaurants going out of business. I saw something that said that half the restaurants in California will not reopen now that they can on the 15th back to regular capacity. Half, right? But out of that, you've got a bunch of people running around with an extra 10 grand in their pocket or maybe an extra 150 grand that are now going to open the restaurant of their dreams. So it'll just recycle. It'll roll over, right? But what are we talking about? We're talking about the flow of things. We're talking about the pipeline. I mean, look, let's break it down really simple. Let's go back to lumber. Why? Because that's on everybody's mind right now, right? So this is how lumber flows. It's first of all, we got a tree in the forest. We go back to that age-old question: if it falls in the forest, does anybody hear it? But there's a logger there, and he heard it because he cut it down. He put it on the truck. It arrives at a sawmill or panel mill. It gets dealt with, gets processed, goes through that whole process. But if any of you have ever been by a sawmill, you see that they've got these big, huge piles out there. They got sprinklers on them, right? We have a lot of those here in Idaho. They got sprinklers on them because they got to dry the wood, right? They got to get it to naturally release its water so that it will be in a position where they can mill the lumber, deal with the lumber, and then not have too much shrinkage, right? We deal with that before so it doesn't warp and twist. Then it gets cut into the sizes, the lengths, the material that's wanted, and then it gets shipped out. That process, when you interrupt that process and you interrupt the flow of that, you've got to go back and start at the forest, right? We had a whole season. We had a whole spring, summer, fall, winter of everything that didn't get done. So now we've got to go back and we've got to restart that. We've got to restart that with computer chips, right? We're hearing about the shortage in cars and how the cars are not able to be made because we're short computer chips, right? How many people, show of hands, have thought about buying a new car or bought a new car in the last 12 months? I know a couple people that went out and bought one during COVID because they remember what happened in 2008 and 9 when the bank shut down and nobody could get a car loan. So I know a couple people that went out and hurried out and bought a car loan. Okay. So we've got things that have gotten programmed into us that have making things worse instead of making things better. Right. So all of these things get programmed into us and we're dealing with this stuff. But now we're short computer chips, so the price of cars go up, right? What do? We stimulate the economy we lower interest rates, so we create more demand for housing, but we have less houses and cost more to buy the wood, right? I talked to several other builders that shut down and said, you know what? We're not starting any new homes in April and May and June of 2020. So there's 3 months of supply that's missing. You go back to where we started this whole mess. Beginning of COVID, we were about 6 million units short nationwide on what we needed for housing for what was in America, a demand right now today. You think about what's happened in New York. You think about what's happened in California, where people have moved away. I saw that California, for the first time in recorded history, lost people, right? And it's not that they lost them. We found them right here in Idaho. They're over there. And if you need help spotting them, just wait till it snows and you could totally see who's from California because they can't drive in the snow, right? But people have moved. The migration patterns have changed because they realized being locked in San Francisco with 7 million of your closest friends on one of the strictest lockdowns that our nation has ever seen wasn't their cup of tea, and they weren't going to do it again, right? So when you started to see all that, now you have people moving out, moving to areas. Now you have houses that are vacant, right? You have apartments that are vacant. You have things that are happening that people look at and go, man, I don't want to be a part of that anymore, right? So now you go from 6 million units that are necessary and you have a net migration pattern of 3 million. I've heard numbers from brokers in New York that there was a 23% vacancy at the worst in lower Manhattan. Okay. That's almost a quarter of the units that are vacant. They've got to recover from, but the people aren't coming back from Florida, right? We know that the governor of Michigan loves Florida, right? But we found that we need these things to happen because now we have pent up demand and people driving into areas that are not equipped to handle it. And then you also have people from areas they don't want to go back to. And so now you have vacancy. So you have this kind of adverse effect where some of the hottest markets in the world, literally pre-COVID, New York City was record-breaking prices. Every time you turned around, another penthouse went for this much a foot, right? And now those are kind of going the other way where there's more supply than demand, right? And so now you're starting to see that ease in pricing. You're starting to see things come back. I've heard of lots of markets in California where not only we've lowered interest rates, which allows people to have more buying power, but the price hasn't moved, which is really a hidden place of inflation to hide. So now we've got somebody that couldn't afford that $1 million home 2 years ago that can now afford it because the payments dropped and the home is still luckily only priced at $1 million, right? So that's where inflation is coming into our market and we're seeing that. So now we've got all of these things that are happening that now have to go back into the supply and demand chain and get pushed through. We've now got computer chips coming in from China. Again, the docks are opening up and the workers are processing and things are moving in. Well, now they got to get to the Subaru plant in South Carolina, right? They got to get to the Chevrolet plants in Mexico and they got to get put in the cars and then they got to get shipped here. It's not like, oh, good, COVID's over. We turn the world back on and we go back to work. And that's not exactly how this happens, right? So it's not that there's a shortage of cars. It's a shortage of a computer chip that has to be shipped here, that has to get placed in we have a shortage of labor that has to go into the assembly line that then has to get shipped to the dealership. There's a shortage here. There's shortages and there's parts of our supply chain that have shorted out, right? And so fixing this problem isn't going to be easy or quick. Fairly easy in the fact that we've just got to put it back together. Fairly easy in the fact that there's no longer disruption. Now we can deal with this, right? But 2.5 years ago, when we were finishing an apartment complex, we had this little tiny company called Sears go bankrupt on us, right? Any of you ever heard of Sears? So we couldn't get stoves and appliances. Well, now we can't get them because we can't get the parts and pieces from China to assemble them, right? So we're back in that. We've still got to overcome those, right? So now everybody's speeding production back up. We've realized we've got the all clear. Things are coming back around. The economy is turning, but we're at that fever pitch. Everybody wants one now, right? We've seen in Idaho that pre-COVID, we went from about 4,500 homes on the market in the MLS to 2 weeks ago, 450 homes available for sale. That was it. So if you wanted one, you couldn't get it. It didn't matter what you thought you wanted, you couldn't get it, right? But we're starting to see why the supply chain caused the problem, right? It wasn't that we had COVID and it's over. Now we've got to rebuild that supply chain. We've got to put the things back in there. You know, we recently had an Amazon building built here in the Valley. And I thought, man, what a sucking sound that's got to be on the supply chain when you've got to fill a 4-story, 80,000 square feet per floor. Sorry, it was 130,000 square feet per floor. So you've got 600,000 square feet of product to put in, all of the trucks that have to bring that in for the first time just to be able to send out. How much is that got to be? That's a ton. And yet if you interrupt that supply chain and interrupt that shipping chain and interrupt that trucking chain, all of those things now, what used to happen in a couple of weeks now happens in a couple of months or 6, right? So now we had all of that happening. The spring of 2020, a ton of wholesalers not only didn't order, but they sold off their inventory. And once companies started to increase, everybody went back to the trough at the same time. So now we see this massive buying, and it's an auction, and everybody's saying, I'll pay more for that. I'll pay more for that. I need that more than you. Little Jimmy, you don't understand. Little Jimmy's got to get into that academy over there, and this is where we have to live, right? We're still struggling to get employees back in the mill. We're still struggling to get back to pre-pandemic numbers, right? But I saw an interesting thing happen, and we've all been worrying about this. And this is a funny thing where capitalism oftentimes takes care of itself. You know, pre-COVID, everybody's having the $7.25 argument, right? $7.25 an hour is not a living wage, right? Seattle's going out of its way to pass a $15 an hour minimum wage. And now all you have to do is drive down the street, and every fast food restaurant in town is offering everything from a $50 interview fee, $500 signing bonus, and $15 an hour. That's McDonald's, and it goes up from there, right? Because we're in that shortage, and everybody's looking at it going, I got to get my burgers out. Our way of eating has completely changed, right? There have been businesses come up, and this is the thing I love about America, right? Everybody gets creative. In 2020, I think the phrase was, can you hear me? Because we all were learning how to use Zoom. In 2021, the term is pivoting, right? You millennials got these great terms, but pivoting is the word because everybody changed what they did. And there's all these businesses that pop up to prepare your meals because there's a lot of people out there, they don't know how to prepare meals. They don't know how to cook. They were always eating out anyway. And when you close restaurants, these people didn't know where to go. So there's been things that have popped up like that, and people have seen how that works, right? So now we're starting to see the growth back in the supply chain. We're starting to see things happen, but it can't happen overnight any more than you can grow a tree overnight, right? We're still dealing with the effects of the California wildfires. We're still dealing with the logging on federal lands that is restricted because federal lands are governed by the mask mandates and things like that. And so we're seeing all of that happen. But the reality is, in the South, there's a glut of timber, but there's just not enough sawmills to process it. There's plenty of timber being produced, but not enough resources to produce the lumber, right? So now we've got it. We've just got to get it cut down, put on the trucks, and get it there. So we're starting to see where things are starting to go backwards. But how does that, Shannon, how can we figure this out? This isn't easy. What are we doing? But the reality is as those things have happened, we've seen a lot of things that we were told was going to happen, not happen, right? We didn't see in the Pacific Northwest, we didn't see a lot of delinquent rents, right? We're getting ready to come out of that. We've seen prices escalate. If you look at and want to compare this back to 2008, in 2008, as the market was falling off a cliff, literally, financially, and price-wise off of a cliff, prices were coming down in a vertical line, right? $50,000 price drops a week on $400,000 houses. That's not a lot until you're past the bone. But we're starting to see things differently because prices have continued to escalate. Now homeowners who are behind on their payments or took some sort of a deferral are now able to still sell and walk away with some cash because prices have marched on and things have escalated because lending is fluid, right? The demand is there. People realize that it doesn't matter if you don't want the house, somebody else does. And if you'll move out of the line, I'd be happy to purchase that from you, right? So there's some differences there. We've seen rents climb. We've seen wages climb. We've seen everybody not panic, but prosper. And not totally, right? There's been a lot of areas of our lives, in everybody's lives, that have been affected, right? This pandemic hasn't been fun, and we can take the media out of it. It doesn't matter what the media said or what the government said. It still wasn't fun. There was nothing fun about this. But we're all realizing that the economy stayed fairly strong, that we're still sitting there looking for things. And now we've got another resource problem. You know, we know that we lost about 9 million jobs when the pandemic hit the first month. According to the numbers, we've only replaced about 2 million of those. But everywhere you go, there's a help wanted sign. So how can you have 8 million, 6 million people that are having trouble while you're in the middle of a hiring freeze? I mean, it's not a hiring freeze. Nobody can find employees to hire, right? So we're slowly marching our way out of it. We're slowly getting back to a place where things are going to normalize. But the reality is things are better than we had expected going in because the demand is still strong. For those of you that remember your high school econ class, that supply and demand balance is not there. And when that's out of balance, you either see prices plunge or prices skyrocket, right? In our latest session and in our latest cycle, we have seen demand stay strong, in fact, go up. And we've seen supply come down, so prices have surged even more. Everybody's got FOMO. They're struggling with the reality of, what do I do next? What if I missed out? Prices have just gone up 50, 100 grand. Now I can't afford a house. Oh, they just dropped interest rates. I'm back in the money, right? So as we see things start to normalize, I think what we're going to see is we're going to see this rushing back into mainstream. And it's just like a river that flows down. The narrower it gets, the faster it runs. And then all of a sudden it hits the ocean and it slows back down. But it takes a while. It takes a while to get it back up to speed and for the supply chain to fill back up to where now we're looking at going, listen, I don't have to buy this particular car because the chips are coming back off the line again. And there's going to be the car that I want here in a little bit, right? I'm going to be able to buy the inventory that I want. In fact, 2 weeks ago, we saw about 450 houses on the market that week. New listings on the market in Idaho. This last week, my market report from my friend Danica over at EXP was that we have 520 houses on the market newly listed on Monday, right? So that tells me that supply is coming back up, but it tells me also that we're still way behind the curve, as much as I see that went up 10%, right? This is where statistics can lie to you. It went up 10%. The inventory went up 10%. Went from 450, 10% of that's 45. It's now at 500. It went up 10%. But we're still looking at a median number of about 4,000 needed in the market to make it work. Our market runs at a normal number of about 4,000 to 5,000 homes in the market. That's equilibrium, right? Do you know that in our market in Idaho, a 6-month listing time frame from the time you list it till the time you close on it is normal? We've seen, I know of somebody that closed on $1 million home with a 4-day due diligence and a 14-day close, and it was all cash, right? Why? Because they knew they wanted to be at the front of the line. Multiple offer situations are everywhere. What if we got to that point where we now have 3,000 listings again? What do you think we're going to do? For the last year, we've had blinders on looking at it going 400, 400, 400, 400, 4,000. What the heck? Now there's too many. Oh my God. No, but don't buy. Wait. Aaron, don't do it. Alberto, you can't. That's not going to be a good idea because there's 3,000 houses in the market. Forgetting that humans have a very, very, very short remembrance, right? Very short memory. As we begin to normalize, I think we're going to reach a new plateau. Lumber, remember what gas prices have done in the past? They surged. They went from $1 to $3. They fell back down to $2. They went up to $4.5 in 2008 and 9. Then we started fracking the crap out of it. And we started seeing them come back down. They got back down into the 150, 175, 190. But we never did see $1 again, right? Now gas is back on the surge. 335 was what I saw on the way to the office today. but we might see it come back down. We might see it go back up, but it never comes all the way back down. So we're going to see lumber prices probably stop in the 650 to 700 range. By the time they get done coming back down, that level will probably be, by the time we get back to a normalized supply chain, will probably be in the first quarter of 22, right? A lot longer than we want to think, but we've stopped going up at such a rapid rate. So now we saw a $15 gain last week instead of a $100 gain, right? Which is great because you got to stop, you got to plateau, and then you're going to start to see prices ease. What's going to happen? Are we going to see prices go slack? No, I think as you get down into where plywood goes from $80 a sheet to $60 a sheet, I think that you're going to see the plywood manufacturers, kind of hang on to that artificial supply and demand situation and keep that churning because we're still buying it, but keep that fine edge so it'll slowly come back down. But then you've got people that don't want to wait. I got to sell right now. I got to sell my house in California right now because I got to get out of here. Texas is filling up, and I want my 40 acres, right? We see people wanting that. So they're willing to do things now, even knowing the prices might ease a little bit. How many people know somebody, by a show of hands, that buys a car as soon as they release the new model, he buys that car or she buys that car, and they're buying the first ones, and they're buying early, and they're paying the highest price, but they get to show all their friends that they got the first one, right? Dean, of course, Dean raises his hand. Dean knows everybody. If you guys need to know somebody, look around the chat, find Dean. Dean knows somebody that you need to know, right? Shout out to you, Dean. But that's where we're at. We have those people that are always diving in and always doing that, right? So we're going to see that slowly come down. It's going to come down slower than it went up, right? So in my belief, we're going to see those prices continue to apex and come to the peak of the market here in the all the way through the second quarter. Probably in September, you'll start to see prices ease, and you'll start to see inventories rise again to their headed toward a normal level. By the end of the year, you're going to see normalized inventory levels. Once that happens and you reach a normal inventory level again, then it's going to be a little bit of a downward trend because now we've gotten to where things are normal, and I can buy one if I want to, and I can buy one if I don't, and I'm not having to deal with that FOMO, that fear of missing out. And so I'm able to wait around and let things kind of do what things do and let them kind of come to me. Now I don't have to go, hey, I'm buying all cash, I'm doing this, I'm doing that, and by the way, it's $100,000 over. You know what, Mr. Johnson, you've got a fair price on your house. I'm going to need to get an appraisal. I'm going to need to do this and that. I can close in about 40 days, nice and quick, but I'm not going to do any of that crazy stuff. Are we good? Yeah, you know what, Mr. Robnet, I think we got a deal. Perfect. And we're going to see that kind of stuff happen, right? Where we're not having to jump in and find a way to get the cash to close the deal, right? But it's not going to come quickly. We're still going to see prices continue to go up because rents are going to push. Now we're seeing wages come up. Wages are always the last thing we saw because they're motivated that. See, because you guys know your job is just over broke. Your boss is going to pay you only what will keep you from quitting. And so until the market tells him, until McDonald's says, hey, you got to pay this guy $15 an hour, and you got to pay him a signing bonus, and you got to pay this to get him to show up, McDonald's is going to say, I do for now until I automate your job, right? And then you're going to see that automation. Now it's going to free up some of those guys to go into other lines of work. They're not asking if you want fries with that. You're asking them what aisle is the copper fittings on, right? And you're going to see that. You're going to see that effect on labor, right? But right now, employees have a hand in dictating what they're going to get from their boss or what they're going to get from the company because there's a labor shortage. And as you see that continue to push, you're going to see that now trickle in, and people are going to have the opportunity to pay a little bit more in rent. They're going to have to because prices have continued to stay high, right? And now the landlords are coming due for lease renewals, right? If you think about it, what about everybody that signed leases in December of last year? December of 19. They came into December of 20 and they said, you know what? No raise. We'll leave it right where it's at because I'm glad you're here and I'm glad you're paying on time. What happens when that comes to December of 21? Oh man, it's been 2 years since I've taken a rent increase. I'm bumping you 6%, mister. Hope you like it. But then there's those others that have been filling up as they go along, and they've been pushing the market, right? Something that we do on a normal basis just in how we continue to price things to make sure that we're capturing the best that we can capture for our investors. But the reality is, at the end of the day, the supply chain is going to ease slowly. But because we have such a hole in it, and we have a 6 to 9 million people that are clamoring for the housing, we have a shortage. We're still going to see incredibly strong demand, in my opinion. This is just my opinion, to get things done, to get houses built. And we're going to see that continue to push wages. We're going to see that continue to push profits. We're going to see that continue to push everybody along the way. And a rising tide floats all boats. So, guys, as we conclude this, I want to thank you for your time, but I want to tell you not to look for any radical changes either way. We're not going to see a foreclosure market. In my belief, we're not going to see a foreclosure market because there's equity in everybody's house. Even if I could walk away from it and not damage my credit any further, why wouldn't I want to sell it? In 2009, I had one of only 2 licensed mortgage modifications companies in the state of Idaho, and we helped a lot of people that just wanted away from their house. I can't bother to think about it. It hurts my head to realize that house is $100,000 underwater. Nobody's having that thought process right now, right? Everybody's looking at it going, so what you're saying is I can not only break even, I can make 20 grand, even though I'm in foreclosure, even though I haven't made a payment in 14 months, even though I got to catch all that up, I'll take it because I still get paid at the end of the day. There's going to be very few people walking away, even though the foreclosure actions may be filed. So if you're seeing that in the market, you're not going to see banks freeze up. When you don't see banks freeze up, there's going to be the opportunity for capital. And that opportunity for capital allows people to stay in the buying mode, which makes people happy, right? Makes the world go round. If you can buy what you want, and now there's actually inventory to buy with. So guys, I hope this has been informative. If it has, raise your hands. Let me know. I love to bring information, like to make sure that it's pertinent, and hope that we can add value. If you've got questions, throw them in the chat. I'll do my best to answer them. But wanted to just kind of show you guys what we see at our level. We've seen our mortgage rates come down. We've seen our lumber rates go up. But at the end of the day, I feel that we're going to start to see some normalization over the next 6 to 9 months, that by this time next year, it's all going to be a bad dream and we're going to be on to what's next. So guys, I really appreciate your time. I'm going to open up the chat box if you guys have got questions. Other than that, I really appreciate you all coming. And if we didn't catch where you're at, please throw it in the chat so that I can know where our audience was from, so we can kind of better see who we're serving. And also, if you've already told me where you're at, but would you tell me where you found us, how you came to this webinar, so that we can kind of make good sense of that and be able to see where we're going with our next ones, because we do want to bring relevant content. Thank you guys so much for coming. We'll talk to y'all later.